Okay, hello everybody. This is Wes with Pikes Peak Trades and giving you a market summary video for the week of trading that ended Friday, September 18th. As you all know, September has just been a pretty torturous month in the markets, 3 weeks of just really hard selling. And if you've been following me on Twitter, you know that on Friday, my bias turned bullish. And so I wanted to put a video out there where I could give a little more detail, explain a little bit more nuance into why I think we might have put in the significant bottom on Friday. And of course, talk about other possibilities as well, because you know that nothing is certain. I'm not saying with 100% certainty that on Monday we open up and we go higher. I'm just saying there's some weight of evidence that might suggest that we could have a bottom in place. So I actually want to begin with small caps. And what I want to point out is that for the 3 weeks here in September, and really looking back through mid-August, is that small caps really have not sold off significantly. In fact, as of the close on Friday, you can see right here with this candle that you might call a bullish hammer candle right there, is that it actually closed above its 8-day EMA, above its 34-day EMA, well above its 50 SMA, and almost above its 21-day EMA. And that is in stark contrast to SPX and QQQ and NASDAQ. You're going to see something similar on the XLF daily, where mainly we're seeing a sideways move. So it is not true that the sell-off for the last few weeks has been market wide. It's really been concentrated in tech and in the S&P 500, which you know that tech makes up a huge component of that. XLF, as of the close, is above its 50-day SMA and just slightly beneath all of its significant EMAs, and one move up, one gap up and go. I'd sometimes call it a jump the creek move on Monday might actually set that low in place. Now, of course, you did see on both charts that we have to consider the alternate possibility that we actually are going to get a lot more selling. And so for that, I do want to take you to the XLF short-term chart. And on the short-term chart for XLF, it's really going to be obvious just kind of how binary this is. That on Monday, the bull count is really calling for a strong move up. That we've got one of these classic 1 2 1 2 1 2 nested setups in my EW analysis, or we've got a 1 2 setup on the downside. And so really Monday is extremely important, and I tweeted out that I'm excited to see what it brings. My primary counts are bullishly aligned, and what you've just seen in small caps and financials, I think non-confirming a sell is part of that weight of evidence approach that I'm wanting to use. I do want to show you a few individual names, and I'll show you Goldman. And what I want to start showing is we've got the short-term divergence that you're going to see in place. And that should at least be good for a bounce. But I think that in a name like Goldman, there's a chance that we put in a clean 5 waves down here, and it actually just finished its intermediate 2 sell-off. In XLF, I'd already had that finishing just because of the strength of the move that it did have through the month of July into early August. Goldman really didn't experience that. So JP Morgan the same in just a huge triangle. Okay, so there was a breakdown out of it, but if it's found support, and then we're going to try to see some upward movement that might follow it, gradually trying to reclaim some of that support. Okay, so let me get you into the names now that did experience the big sell-offs here in September. So you're looking at the daily chart of the S&P 500, and what you're going to see is you're going to see what I think is a pretty clean zigzag moving down. You definitely can see there's a few more scary downside targets. If I take you to the short term, so zooming in a little bit, you're going to see, and this is going to be consistent across so many of the charts that I'm going to show you, a long positive divergence. In this case, it's in the MACD. There is also a shorter length of divergence in its RSI 9, but that is, I think, giving us some evidence that at least it bounces in, but perhaps a more significant low. And when we see some tech names, I think that evidence is going to gradually start to build. So I have SPX as just tracing from September 2nd, a pretty simple zigzag down. Now, the B wave got a little more complex. It would be more of a kind of an expanded flat wave, but then I think just a clean 5 waves down into that low. And on Friday, when the S&P 500 broke 3,300, I really thought that round number break was just going to lead to a cascading waterfall sell-off. And I had this lower rail in mind here, or possibly even this double rail support. When it did not do that, and it actually rallied back, that's when I thought, hey, you know what? This could be the kind of intraday reversal that we might actually need to have in place in order for there to be a trend change. Okay, so now might it just be a bull trap? Is this a bear flag? It absolutely could be, and that's why we've got to keep an open mind to some of those targets that are a little bit further down. Let me move on the daily chart now into QQQ. So QQQ, I've got a couple areas circled, and the question is, do you think that this area here in the February-March sell-off, does that look like this area here? Of course, there's the loud bear population out there on Twitter that's saying that this is just the beginning of another sell-off like we already saw in March. And I actually don't think that they're similar. A couple things I want to point out is by the time this first leg down ended, look how far beneath all of the moving averages this leg was, all the way down to the 200. On this first leg down, the 50-day didn't even get hit. The 50-day got hit but didn't get closed against until kind of this pattern here. That's more of a sideways, kind of a diamond-like, or in this case, it did end up being a bear flag that broke down, but nothing of the extent so far of what was seen in March. Now, might there be waterfall selling yet to come? There could be, but I just don't see the kind of massive selling so far to say that we're going there again. I think it's different, and you're also going to see here. This is kind of the first indication of some things to come in individual names. What I see as a bullish falling wedge. Okay, so let me take you to the short term now in QQQ, and you're going to see that wedge a little more up close. Notice again, same as SPX, a 3-week standing positive divergence on MACD and a multi-day divergence here on the RSI. And here's the first of a bullish falling wedge, where I think we set a first leg down. We had almost a 50% retrace bounce, and now an overlapping falling wedge. 1 down, 2 up, 3 down, 4 that didn't surpass that height. That's what kind of sets this apart from SPX. It needed to be a zigzag because this did surpass the height here. And then a clean 5 waves down, 1, 2, 3, 4, 5, into, I think, that final piece of the falling wedge. Where you're going to notice we've got some fib retracement here. It is above the 38% retracement, but it's almost a 30% retracement of the entire move for March. So you're going to notice there's significant resistance above it. There's this rail to clear. There's this gap to fill. Of course, it's got to recapture. Here, there is a lot of work to do to fix this from just both a classical TA and an Elliott wave perspective, but I think we're starting to see the possibility could be there. Okay, so now let's get into some of the individual names. So individual names here, let's take a look at Apple. And if I was to zoom out, I'd already done this on a previous Twitter post, that this rail here has now connected to 3 significant lows. The low in March, this low right before earnings in late July. And now it appears that Friday's sell-off also held that rail. Okay, now a 38% retrace has been hit. There's some things that are there in place. The bad news is it's still beneath the 50-day moving average. And you'll notice that you've got the blue 8-day crossing pretty solidly under its 21 and its 34. And that is definitely a bearish pattern, but it doesn't mean it can't reverse if we get some movement back to the upside. So let's see Apple on the short term, and you're going to notice again a falling wedge. So here what I think is essentially tracing out the same pattern of the Qs. And in addition, an even longer term stretch of positive divergence on the RSI. So when you're seeing MACD and RSI divergence, just a little bit about how those calculations work. For the MACD, when the MACD signal line crosses back above the 9 EMA period line, which is exactly what happened right here on the bounce at the end of day Friday. What it's talking about is the rate of price increase is starting to increase faster to the upside. So the rate of price decrease has decelerated. The rate of increase is now actually surpassing its 9-period moving average. And that's what we look for technically with those indicators to try to give some evidence that a significant low could be in place. And when this happens over a period of 3 weeks that you're seeing on these green arrows, that is even more significant that we actually could at the minimum see a bounce. So at the minimum, on my alternate count, we would be looking for a bounce from this low somewhere but beneath this price here. So I would be thinking at the minimum a bounce up above 110, but you're going to notice my primary says that bottom is in. So again, just like Qs, lots of significant rail support to defeat on the way up. It's not going to happen in just a couple days. It's going to take some fits and starts. It's going to try to attack one and retreat, attack another and retreat. And I think it is going to give multiple entries to try to get in. At least that's what I'm seeing when I see a lot of stacked overhead support. Okay, let me take you through a few other tech names that show some similar patterns. So if I get you now to Google, what I want you to see in Google is I want you to see this gap fill. So all the way back here, this has been an open gap all the way to the 1st of July. And Google filled that gap on Friday by about 80 cents. And the market has memory. You're going to notice there are some gaps that did not fill. Maybe yet, maybe they won't. Apple has a significant gap. You're going to see one coming up in Facebook. But if we're getting gap fills and then perhaps we're seeing some of that technical divergence play out, maybe we're seeing some bottoming patterns put in. Now, certainly Google has a pretty damaged chart, and it's got to get moving up quickly back towards these moving averages, or there's even more scary downside targets in play. Let me go ahead and show you again, just for another example's sake, in Google, another bullish falling wedge. And really, I think tracing that out well. Here's that gap fill. Here's the first attempt at a bounce. If there's going to be a lower move, it might try to tag that rail and then sell off again. We're just going to have to wait and see. But I think Monday's definitely going to be exciting. Let me show you a few more big tech names. I don't need to show all of them. What I do want to show you is Microsoft. So I want to show divergence on Microsoft of even a larger scale. So you're going to notice not only that falling wedge, but you're going to notice down here, we've now got RSI divergence. So from the 8th of September on the daily to the close on September 18th, there is a lower close here as opposed to here on weakening momentum. So an RSI of 39.16, an RSI of 40.11. Again, This is some of the technical information that I like to try to use in conjunction with Elliott Wave and some classic TA and channeling techniques to try to show that possibly a bottom is in. The other thing I want to point out is a reversal candle. So this closing price here closed above the low of this previous candle. And a lot of technicians look at that as a signal of a reversal candle. So on the short-term chart now for Microsoft, you're going to see again that bullish falling wedge. That first indication that we've got a reversal in play is going to be a regaining of this active rail that has essentially pushed price down 1, 2, multiple times in a stretch of about 3 days in here. Regaining that is going to set some of the targets in play for the original breakout that ended up being a fake breakout. But that's the set of steps that's got to happen. Okay, otherwise you're going to see those scary downside targets again, just like XLF and IWM, the binary possibility there. Okay, so I want to finish by showing you some metals. And so if I take you now into the dollar index that I think we've got to look at if we're going to put metals in context. So far, the dollar has been held back by its falling 50-day and its 8 and its 21-day EMAs, closing underneath all three on Friday. So I think dollar weakness to some of these downside targets here would support, especially metals and probably stocks. So GDX and GLD, I want you to see a zoomed out picture because I think it's really important for you to see what has happened in miners and metals in regards to some very significant long-term numbers. So if I take you all the way back almost 10 years into a downtrend that went all the way into early 2016. Originally, this would have been charted as a 1, 2, 3, 4. Sorry, I should say 1, 2, 3 down with an expanding fourth wave right into here. But when price moved above what is labeled as the first wave down, this fourth wave projection became invalid. So it has been invalidated, in my opinion, to the bull side, which means I think there was a significant cycle and primary low put in place in miners and metals over the last 4 to 5 years. And I think we're just seeing the kickoff legs of what could be a tremendous rally and really still in the early stages here, where I have GDX as putting in a 1-2 and then a 1-2 with a 3 of 3 up yet to come. So to show you that here in the short term, let me get to this chart. And you're going to see that I've got that 1-2 set up. 1-2, 1-2. It is about as nested a set of Elliott Wave targets as you could get. So we're talking about a minuet sub 3 within a minute 3 within a minor 3 within an intermediate 3. And so if we start seeing movements up in miners and metals, I think they're going to be explosive. And judging by the way that they've correlated with stocks since March, I don't see why it wouldn't also happen in stocks. Okay, so again, there's the binary alternate that this could just be a B wave bounce that's going to send it to lower targets. We've got to keep a flexible, open mind. But my primary, like you're seeing in stocks, is up. Similarly in gold, although I don't think it's in quite as aggressive a degree count as the miners, which do tend to lead a little bit more to the upside. I still have it in a 1-2 looking for a 3 setup in gold. And if I jump back now to the weekly chart so you can see GLD's bigger picture, is you're going to see that I have some very ambitious upside targets when it did break above this previous high all the way back into the middle of 2011. And I think right now what we're just seeing is a triangular consolidation, or if you're not an Elliott waiver, I guess you would call that a bullish pennant. And you're going to see once that breaks, I think it breaks big. So I think it will break quickly. That if stocks break quickly up, gold breaks quickly up. Otherwise, it's going to break quickly down. And again, that's why I am looking to Monday and Tuesday just being extremely important. Last thing I want to do is I do want to show you some other names a little more off the beaten path. Well, they're well known, but they're not maybe the typical big tech names that most people would actively trade. I get a lot of questions about AMD, and I think AMD is in a different degree. In fact, all 4 of these stocks in this tab are in a different degree. I think these 4, AMD, Beyond, Roku, and Walmart, I think they have already put in their intermediate too low. The other big tech names that I showed, Apple, Google, Microsoft, you've got to put Amazon in that, and Facebook. I think they're just working on finishing up their intermediate twos, Amazon being a possible exception. But I think we're looking at different wave degrees here. So I've got AMD looking to resolve itself in an intermediate 3, which does mean there would be one more sell-off. But you take something like Beyond, and I have it as well in a nested set of 1, 2, 1, 2, and the short-term chart would also have it in a 1, 2. So I have very ambitious targets on Beyond. Roku, very similar. Primary 1, 2, intermediate 1, 2, minor 1, 2. Look at this nested set. This is as bullish as it gets for an Elliott wave theorist. So I am long Roku in investment accounts. I will probably be looking to trade it more actively with call options. If I can see resolution here above the 8-day EMA, but in post-trading Friday, it already bounced above. So is this an early indication that we're going to get these types of resolving bounces? I am at least tentatively positioned, yes. Final one is Walmart. I am also very bullish on Walmart. Again, look at this nested set that I'm counting. I think it put in its intermediate too low in the middle of March, a 1, 2, 1, 2, 1, 2 count. I think just getting ready for a very powerful and sustained move up. So that's where I'm positioned, a little bit of my rationale, a little bit of the important things that I'm looking for. If you have any questions, certainly reply to the video here. Definitely active on Twitter, and I love acting and engaging with you there. Let's see what Monday brings. We got to be ready both ways, but I think we're setting up for a pretty exciting finish in what has already been a very eventful month of September.